Hello, hello, hello. Good morning. Welcome to another ES Futures trading stream. Today is Friday. It is September 12th, 12:44 p.m. Eastern Time in the US. This stream I think it's not going to be that long because I just want to put some thoughts um, out here. Remember, I do this as a way to journal my my trading, right? You can do the same as well. I used to do it in writing before. I still do. I still do writing some of them, but not in the same way as I used to do it before. But I choose to do it. I kind of switch from from talking, putting it out here in the stream, or writing in writing it in my journal. And the reason why I do that is because I wanna externalize. I wanna make the unconscious conscious, and have some form of record to what I can come back later. But also it helps. It helps to internalize the information that we may have absorbing from the market. All right. One of the first things that I want to highlight here is, I guess I will need to increase this. I will need to make this chart bigger, right? Let's cover Nasdaq, right? Um, right. One of the main trades that was here in this market in these 2 weeks, we had two trades, right? One that came from where is ellipse? All right, okay, ellipse here. All right, one that came from this day, in which this was a 45-degree line, and another one from here, from this day here. Like what is those trades? Okay, what's the reasoning? If and I'm trying to find a logic to something irrational is just it's just craziness, right? I don't know who say this. Show me something that try to rationalize markets, and I will show you something crazy. But the principle behind this behind a sequential trade, or behind a 45-degree line trade, is the following, right? We have an area from which a market sells, right? Well, I want to call an arrow here. What is arrow? Okay, arrow here. Market sells. Market sells. That's too big. That's too big. Let's do it. Let's do something smaller. Market sells. Market sells. Sells again. But each time the market sells, is brought back, right? To what at the time, at the end of the day, was this area that I decided to highlight as green. I have talked about this multiple times, right? What follows, what follows is something that you will see over and over and over and over, right? The thing about trading is that there's a lot of repetition here, but with variation. There are no 2 days that are the same. So it is counterintuitive to say that you will see, or I will see, or I see the same thing happening over and over and over again. What follows is usually all this short inventory. Remember, the main thing. Let me call this out here. The main thing is the market is pull lower, but try to go lower, but it comes back. Try to go lower, but it comes back. Right? It try to go lower to come back. And each time, the market has less and less and less and less. So there's a lot of short inventory that is being accumulated here. Very questionable short inventory. And the movement is, this area here. It can happen in so many ways, man. Sometimes it is like this, Another times it's like this. But it's something. It is something that usually has significant swings that comes after this. So got to be ready. What is going to happen? I have no idea. How it's going to happen? I have no idea. It can be in range as well, I just don't know. And nobody knows this. Right? That was one thing. And what happened is I had a bias here, right? This was a short week. What followed, there's a lot of short inventory here from the weekend. We have the Sunday, we have, I think, Monday, a lot of things here, right? We have the movement to the downside, and then it happened. The next one, concludes when this short inventory is squeezed in this day here. Right? All of that, right? But I usually saw before multiple times happening in one single session, sometimes in a couple of periods, right? This case, the development that came after happened in a 4 or 5 days span. That was one trade. The next one, okay, and now I am going to get rid of these things. I have talked about these trades so many times now. I hope you got this, you write this, or try to internalize this kind of movements. This for the, okay. The next one is this one here. What happened here? And why I call this one the next trade, because once one trade has developed, depending, it is specific for my for everybody's time frame, right? I don't know what the time frame is, but I will have to take advantage of that using the system I have. You may have a different one, right? I don't hold trades overnight, right? But notice what happened here during this day. Okay, these are the overnights. These are spikes in this overnight. I think it was PPI. The next one we have CPI. The CPI was my bad was here actually in this over. No, I am wrong. This was CPI. But what this is? What is this? What is the reasoning for the market setting up for this movement from this day? Okay, coming into this day, we have a very questionable market, right? And inside there, again, check your bar charts. You know, look at this inside bar here. 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 This one is this one here. Really nice inside bar. Okay, really nice inside bar. There was no reason to do anything during that day, right? Or the day that followed. There was absolutely no reason. There was nothing there, nothing. But standing there, sitting in your hands is something really hard, because we have FOMO. We have this belief that I am a trader and I have to be selling, I have to be buying. If I'm not doing that, I am not trading. Okay? There are three positions in trading. You are either long, you are either short, or you are flat. Flat is a position as well. When you are flat, when you have nothing in the game, we have no skin in the game, that's a position as well. Right? For many traders, it's hard to understand that. Right? But yeah, this trade is over. Now, what happened here, right? Upside liquidation, upside trading a range, upside holding. Now, what traders do what work until it doesn't work anymore. Now, I was thinking, watching this market, gosh, what this can be doing, right? Did not understand, did not have an appreciation of the market. Of course, in hindsight, everything is easy, right? We are all good traders when we got charts like this. Okay, I'm going to buy here and hold, and then I'm going to sell up here, right? But that's not how it works. That's not how it works. That's why I believe back testing and strategy. If you have a strategy to sell A, buy A, sell B, then let it run, whatever, and then close when this happens. And you create a strategy, and you back test, right? You use information that is available here. That is a bias as well, and that bias is called, data peak. You are picking your data. That is going to reinforce your belief that that strategy is good. All right. If I want to find data that justify what I'm thinking, I'm going to find it if I look backwards, because it's already there. But that's not how trading works, right? I just can't use what is happening now, because what happens today has nothing to do with what happened tomorrow. If something lead from A to B before, it has nothing to do with the same thing today. If that was the case, everybody will be making money in this market. All right. Now, let's go back to this. This day, I am still carrying this day as a very questionable day, right? Coming from hard coming from hard back. I believe, is this a center or this day? No, this is not center. Center was kind of like around here, right? Very questionable low as well. All these are there. Okay, and that's the reason. That's the reason why I'm keeping this one open. And you have this area as well. This area as well as very questionable, because it has a lot of stops here down below. Right? If the market comes down to here, watch out. That is something that I grabbed. But what we have at the close is a spike. We have this high being taken very, very weird, right? Very weird. This high being taken, and the market coming back and forth, back and forth, back and forth from this area, and finally, and also you got this level, right, from the previous day, which is the high of the inside day. And this is also a trade that many trade that is very popular here. The market looks below the range, doesn't have continuation, and right after that comes and checks the opposite side. From here, the same thing can happen. You can come up here, does not have acceptance, and down we go to check the other side again. But that was, the spike that we have at the close was too late in session. This one, this area here, was too late in session. Too late in session, right? For the market to give us more information regarding if that movement, if the upside movement has acceptance or rejection. Just as simple as that. Right? And what happened the next day? What happened the next day? This day happens. Okay? This day happens. What is this day? You might say. What is the relevance of this day? Right? The relevance of this day lays in the following. Right? I'm going to maximize, try to give it a small as clean as possible. Right? Look at where it comes from. At the time I had an arrow here, not just coming from halfback, but has two very questionable lows here, highs here. Next thing we know, another questionable highs here. And not just that, right? Not just that. This level at the time was the center, right? To the tick of the range. And we talk at the time that if this market has downside extension, this fact, well, this piece of information will be forgotten because downside extension moves halfback lower. Right? Next thing we know, another halfback here. Laggards coming, right? Laggards coming to this market that are removed, which give us this question high. Another halfback here, another halfback here, double highs here. So extremely here. So why are you shorting this market? Right? This is a breakout, right? If you don't have an appreciation, if we don't have an appreciation of the market, this is a breakout of an inside day, confirming higher acceptance of higher prices because value is being built above the spike. One thing, above the spike. Two things, above the breakout of the 2 days of the inside bar. So everything is pointing higher here. So why I'm shorting this market? If I was shorting this day, I really got to question my understanding of market dynamics here. Because that's going against the market. Right? That's going against the market. And to come to this point, notice how we have to gather all kinds of information that the market is giving us. We have the expectation, we have PPI, CPI, next week FMC, the contract rollover is starting, this contract is going to expire. So there's a lot of things that are happening here. And I also mentioned that, when we don't, in this case, it's going to be very personal. If I don't want to understand what's happening, I'd rather just step out. Because there's a lot of things that are happening here. Now we have this external thing, but no external thing, right? This kind of that is some sort of catalytic with Oracle happening. Let's check it. I just want to show you where it is. Oh, right there. No, and this one is and it's having a great impact in tech. All right. This is moving markets. Believe it or not, this is adding coming volume. This is another tech that is gaining traction, uh, in which AI is behind, right? The AI trade is behind here, and this is having an impact in the market. Now, if you have all of that, what would I short in this market? Still, I don't have anything here. Right? To this point, I have very questionable. We have talked about this very questionable uh, 2-day range, absolutely questionable high here. You know? So not the highs, not the lows were good, but the market was moving in one direction. You are checking our bar charts, monthly, weekly, daily, what were they doing. We know about the all-time frame, all-time highs trade, which is very important as well. It was very hard to go with it, right? Because most traders that follow price will need some sort of reference, right? It is hard to grasp that making all-time highs sometimes, it is a trade as well. Now, what happened during the overnight here, if you can check this day, if you can play this, replay this, you will have a better grasp of what I'm talking about, right? Hold on. Let me delete that. I don't need that anymore. The absolutely weakness of this area, right? Follow, but follow during PPI release, news release. It was a bad number. Actually, it was a bad number. These news releases are not good, but the market is ignoring that. And sometimes the market needs a catalytic, to force or to set, right, a rebalancing of this kind of inventory. Now, during this opening, during this spike, we have a spike to the downside, spike to the very weak. There was nothing there. There's a stream that you can check. There was absolutely nothing here. And actually, when the market opens, it opens inside. It opens inside previous range. It opens inside the spike, and very tricky. Right? This is one of the hardest days to trade if we don't have an appreciation of the market. If we are just following price, this is going to be really hard to understand. You can easily get whipsaw here in this market, because after we see this, what happened before, you have a tendency to think what can happen, right? And one of the things that we talk about is, I will not consider this highs repair unless it happens during during regular trading hours. All right? Unless it's on regular trading hours, this is not. And there's got a lot of interest, right, around this area here. And just check the stream again. We talk about this, why I have highlighted this reference so many times. I have put it here. I have put a white line here. I have put another square or rectangle here, just not to forget, right? Just to highlight the relevance of that piece of information. And here comes another market, another way how markets behave. This is part of market dynamics. Okay, I'm going to elaborate a little bit more here. And this is the following. Okay, let's take a screenshot of this so we can talk about that a little bit about this. We know that this inventory here, all of this one here, all of this inventory, most of the day, as you can see, you know, this is, I don't know how to highlight this enough, right? Market is higher, market is going higher, prices are showing the market is showing higher prices. We have a spike, breakout of 2 days inside, but everything is pointing to the upside. But notice what happens here. What is the condition of the inventory that we have here during this day? What kind of inventory you think we have here? Okay, forget, don't pay attention to the overnight yet. All right, don't pay attention to this. Just think about this day. I'm going to erase all of that, and just to highlight this profile here. Where it is relative to the to the breakout of the inside bar, to the inside bar, to the all-time highs, where it is, and what's the inventory, what's the condition to the inventory. Do you think it's short? Do you think it's long? In a market that is moving higher, it's unbelievable how short-term traders are start to short the market. You know, market is going higher and there's tremendous amount of shorts in the market. So the inventory is short. We talk about also about, you know, the buying and selling side of the house and player side of the trade. When there is short-term inventory held by short-term traders, there is another type of participants on this market that are holding the opposite side. Who do you think is holding? I mean, and usually if I have a short-term, you know, market makers, the companies, the funds that provide liquidity to the market are usually in the other side, right? And usually on the other side. So in short term, if I can identify the short-term traders are taking one side, gosh, man, they're just digging a hole here, you know, deeper and deeper. But the way, and you can see the way how this develops, it was really, really nice, right? Because this is what happened, okay? We have a market that opens here, inside previous day, right? Opens here. You can see the openings right here. So, all this inventory is now at risk. Can you imagine what these shorts are thinking? Oh boy, I am underwater now. But I have hopes. The market can come down here. Market keeps going higher. Sales, you know, first time sales exactly from, oh boy, I don't remember. It was either this high here or this one here. One of these, but it was to the tick, right? I don't remember exactly, but that's what I observed. So, what I said, gosh, this is no good. Okay, that high is no good. So there can be something here coming out of this. What the market is doing is not correcting, you know, and this is when all business and current business is. This part of the market is being left behind. All right. Remember this. This is the rollover period. If nothing happens until the rollover ends, these guys will be safe. Okay. So notice that there can be something forming here for next week, because you have FOMC, which usually leads to some wild movements, especially when the expectation is that the Fed is going to cut the rates. Also, we have the contract expiration on Friday, 9 a.m. This contract is, it's out of the window. There is going to be a lot of executions that is going to happen. And who knows what else, right? Now we have this thing happening here. Market is disregarding this part. So this is the business now. This is the business now. The correction of this in the whole inventory. That's what's happening. And the dynamics that happen is, I am short, I am well underwater, the market goes against me, and then it comes back, magically to some point or area or whatever, right? I can see, I am nice, happy, coming down here, right? So what if you are underwater, as you are when you were here in the overnight, this is well underwater. All this inventory, if you would see the market coming towards your entry or towards your average price or whatever, what do? Sophisticated traders or traders with some kind of experience may close there, may take that chance to thank the gods of trading and thank you for letting me come into my entry and close and swear to God that I'm never going to do this again. Never, ever. Of course, the next week they're going to be doing the same thing, all right? And what happened is the market starts to develop to the outside. It comes down again, This also is another opportunity for this short inventory to close. In this time now for a loss. Whoever didn't close, because there are always going to be lots of traders that are going to trade without a plan. The only plan that they will have is, hope or pray, right? Which is a really bad thing. Comes this day. When we watch this day, it is, as the day develops, it is, for me at least, it was clear that this day, what we have here is short cover. Very emotional, multiple distributions. There were, at the time, I guess I saw 1, 2, 3, 4 distributions for me. And again, half back here, half back here, half back here. When this happened, okay, this is, I thought, God, gosh, this can, not when this happened, but when the market started to trade sideways in E, okay, when it corrected this, I thought maybe there can be some correction with this one or this one, right? But the short coverings is really, really rare to see that happen, okay? Because there will be an expectation there, and these movements now are seen as an opportunity to enter the market. The laggards, those who didn't buy here, those who didn't buy here, those who didn't buy that here, they'll finally enter the market here. The same kind of shorts, the same kind of trades that was shorting this day, they are in the other side of trade now. Can you see how it works, how the dynamics? But we won't see that if we see the market really close. If we see the market just based on price, we are, very unlikely, but we will have really low odds of seeing what's going on behind. That's very important. That's what we miss here. And my main thing yesterday was, okay, I want to see if there is some upside extension here. If the market continues to going higher here and building value. It didn't happen, right? This is a truncated profile. It has higher volume though. It has good volume, which could be an indication that there is something else here. But, I keep higher odds to short covering and also to this trade or this movement that's happening with Oracle, right? That can actually, push market and the expectation of Fed and all the stuff and blah 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 blah, right? What happens during the overnight? Look at this. This area here. And it doesn't have really a downside extension. There is, the market closes this distribution during the overnight. Remember, again, I won't consider this close unless it happens during the overnight. It is not happening. Notice where this low is. Can you see? Where this low is down here. This distribution remains open. This distribution remains open. And there we have excess in the low side. Okay? But I consider the laggards are here. And what happens when this is happening? I still want to see if this high is this high is not good, man. Right? This high is not good. It's almost, it is the same as previous day. Yeah, basically this is weak high. This is weak high. It has excess, but it is weak. It is made on the regular trading hours. All right, that's good. But now it is building even more value here. Okay. If I put these two profiles together, this one, I add it to this one, okay, or I see even a more truncated profile. Just like that. Right? Just like that. It doesn't mean, this is going to break. The risk here, but what I'm highlighting here, that is, this is more likely short cover. Okay, there can be a trade here, something that can be happening here. Let's see if I can call this. How can I call this? All right. All right. Okay, this is. Okay, where it is? Okay, this day, right? Yeah. This is a better questionable day. You see? Yeah, this one. This is the 2-day balance. Very questionable low, and the same thing down here. There's a lot of questionable inventory here. That is long. But notice what happened, like yesterday, for example, right? If short-term traders are shorting this market, who is in the other side of trade? Who is selling to them, right? Or who is buying from them? Who is in the other side of trade? What happened afterwards? So there can be some interest here in keeping these values higher until this contract ends, right? That would be a really nice trade. Just think about that. Right? Who is holding this inventory? Who is buying from the weak side that is selling here, this balance here, right? Nothing there. Who can be buying when the market is breaking sharp here? Who is buying here? But at the end, this is a great advance here. Profits have to be taken someday as well. Just think of that. Just take a look at that. Right? And the closer the market gets to an expiration date, this contract expires next Friday. The higher the odds of something like this. Let me show you. And this is a really bad strategy one. It is high rate success, but Jim Dalton says this. Come on, man. When your wins in this strategy are pennies, but when you lose, man, you you pay him $20 bills, right? $100 bills. Um, and Stephen Goldstein, right, has another expression. I read it from him. I don't know if this belongs to him. This is the equivalence, right? The picking up pennies in front of the steamroller, right? You are just picking up pennies, and the risk of being crushed is extremely high. And what is that, right? What's that trade? What kind of action, right? As this market develops to the high, and the closer it comes to the expiration date, and this case in next Friday, right? This contract is expiring. The rollover week is starting. Let me check if I've already started. Yeah, I can consider it has started. We may have significant volume in the December contract today. What happened is there is a group, a set of traders that are going to be selling down here and even selling down here in this area, or maybe below this 50 moving average. But notice, the closer you go to expiration date, the lower the premium is, right? So if you want to make something here in this area or in this area, you actually have to sell a lot of contracts, a lot of options or whatever, right? One of the favorite strategies is selling naked options, right? You sell an option. Let's take an example. Let's take an example. Let's go to September 19, right? Which is the last day. How much are these 6,400, for example? 65, 64, 6,400. 4 points. This is end. This is end of end. 4 points, down here, 6,400, 64, down here. Just check this out. This one, this area, selling naked contracts is 6 points. If you want to do something, you sell 10 of these, you do 40 points, And the only thing the market has to do to cash, for you to cash, is it has to close, right? On Friday, it has to close above this one. Either here, whatever, but not this area. Can you imagine? Well, this is long distance, right? It has taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days to go. This is not going to come down in one day. That's impossible. That's the mind. That's the reasoning. That's the logic. That's the plan here. The market has to close above 6,400, right? And the way how this strategy is sold, man, it is unbelievable, right? Unbelievable how reckless this is, right? How this kind of strategy is promoted by social media. It's just unbelievable. It doesn't have an appreciation of the market because you can lose everything here. Really, it has happened so many times. I have seen this happening also. I have no people. Personally, I have no people, and also, of course, read, right? Their careers that have ended, lives that end because you can have a successful career for years, decades, right? But one simple trade, one simple day can ruin everything, can take everything away from you. Now, what are the odds of that happening? There are low odds that are happening, but the odds are not zero. Low odds are not zero, okay? And that's the risk here of that kind of strategy. That these kind of trigger some selling here towards this area here, and if there is enough inventory, if there's enough positioning in that way, this can happen really fast. And because of, let me close this one again. And because the market dynamics, right, the same kind of behavior, it has the same kind of dynamics that we have seen this day, which I have taken plenty of time to explain or to elaborate today. The idea behind this trade. Only one trade this week. Next week, last week was only one trade, right? And the same dynamics can apply here for this. Market can come violently to the downside. It doesn't have to be the last day or the previous day. You just need a really sharp movement, really fast. And this falls, the options, remember, there were 450 for 4 points. Selling this, if you sell 10 options, you will have 45 points. You sell 20, you will have 90 points, something like that. How much you make? 4,000, 9,000, something like that. The risk is really high. What happened is, if a movement like this happened, really sharp movement to the downside, really sharp, really fast, even 2 days or 3 days before the expiration date, can increase the value of this, Instead of being 4, 5, if this market keep going higher, this will go lower, right? It can go to 3, to 2, to 1. But if it does start to go lower, this can go higher really fast. You have sold these options for 4 points, and if the market comes down here in 1 day and ends to the downside, this can be 15 now. So you are underwater 10 points here per contract. Times 10, you are 100 now. So you are well underwater. Come on, man. Now the play starts to happen. I just need the market closes below this. But by then, margin calls may come. Accounts can be forced to close, which means that you have to buy, you have to liquidate. How you liquidate a short here in this case? You need to buy it back, right, for a loss. And that buyback moves the market higher back again. Okay, so that's just part of the dynamics of the market. That's part of what is behind these movements that happen, because I am short-term trader. I don't hold trades for long. I don't hold trades overnight. As a matter of fact, I am not an investor, right? I am not an investor. What I try to do is I try to take advantage of these intraday movements, kind of like getting to know, trying to understand, trying to figure out what is going on behind what I am seeing, behind the charts that I am showing it here, right? That is what I'm trying to do. Now, I don't know how. I've noticed I haven't talked about this market at all. These arrows here remain. Not this one. I'm going to move this one down here to highlight this. This one is questionable as well. This one too. This one here. Okay, this one. These three are the reason behind that is double O's, halfback, another halfback here. These are the distributions close. As you can see, last night when I saw this overnight trading around this area here, I I guess what I say is because, okay, there's nothing here that I'm interested. There also something comes out of this. Is this a questionable? Yeah, this is a questionable low, okay? There also something coming out of this today, or maybe it market showing some kind of opportunity. That's very low, okay? If the market keeps going higher, that will be a market giving me some kind of like a confirmation of that there is interest in this market. But the fact that it did this, what I'm interested now is actually what where the market closes. If it has ups, if this profile here has upside extension, it has not had. There's a lot of value being built. Notice what happened to value. Value is inside previous day range. So if I join this profile to this, okay, it's going to have the overnight as well. Disregard this part, but you can see what's happening. This is looking a lot more and more like short cover. All right, and what usually happens after this kind of movement is the market has a tendency to rebalance this inventory here before its next directional move. You can keep going higher, you can keep lower. What do we have next week? One of the most important things that we have next week is FOMC. Okay, FOMC is on Wednesday. It's on Wednesday. We have retail sales on Tuesday. After that, that's the thing, right? The trade has been completed yesterday. What's happening next? I have no idea. Right? I have no idea. I need to be observant of what's happening here. My development. My main interest lays in. So far, I'm seeing accumulation of this inventory. I don't see an upside extension. This may have upside extension. Just don't fight the market, man. Don't fight the market. Market this kind of movements can go long distances, right? Before any kind of correction. And I am not going to bet the house in anything here. Anything here. If that starts to happen, this market may need an exogenous event to trigger a rebalancing. But if I have something, I always will try to assess what kind of risk I may be assuming or willing to assume during these events, during these days, right? And my mindset was for these 2 weeks to take the market one day at a time. The rollover is here, so unless there is something clear, I have nothing. Notice the volume we're having now. December is 100,000. It has jumped from 64 on Wednesday and from 30, almost twice each day, right? On Tuesday. So the rollover is here. Got to be very careful here. All right. Unless you have any questions, I'm going to be calling it a day. And wish you guys a wonderful rest of the day. Stay safe. See you.